Okay, so today we've got James with us. Stefan's on vacation. Welcome back to the CrashLabs. And I think it's interesting. We should maybe even talk about this little slogan here, making money while the world is falling apart. And it certainly seems like the world is falling apart today. And it's, yeah, I mean, I don't know. We've had a lot of stuff happen in the last week. We all consume a lot of macro market stuff, but I'm not so sure how much of it we believe anymore. We've heard the gold bugs go on about things, and what do you guys think?
I think just due to the space that we're in, we're always going to be contrarian investors, and maybe it's because we are gold bugs as well. But
I'm a gold bug.
Yeah, we're positioning ourselves for the inevitable collapse of, our system.
But is this it?
Maybe not to the extent that the hardcore gold bugs believe, but
You guys are gold bugs, huh?
I am.
What does a gold bug mean? What does that mean?
Means I like gold. Means I feel safe going to bed at night knowing that a predominant chunk of my wealth is locked up in gold.
But does it mean that like you have a a target price for gold where it's going in the next 6 months or anything, or is it just like I like to be in gold?
No, I just think I don't even necessarily have a target price for gold as much as I have a crash imminent on everything else that's not gold, like the dollar, for instance. Like, I just don't like the fact that they're printing as much of it as they are. The debts are unpayable worldwide. That all of this is just ballooned into like a card castle that is eventually going to collapse. I mean, it's collapsed and then built up again. And I like that gold isn't necessarily tied into that. So for me, I guess it's more of the protection rather than the investment side of it.
Do you worry that with all those alternatives like Bitcoin and stuff, that all of a sudden the luster of gold is not there anymore?
Totally.
We're in mining, so that would be kind of a bad thing, but
no, I mean,
but
why is it bad? Right. Like, I mean, I don't know. Like, I don't personally like the Bitcoin stuff. The crypto space. I mean, I've been wrong and I've missed many things. We talked about medical marijuana. I totally missed that. Crypto, I was there and front row seats in a lot of it. And I know you did some crypto stuff, and I personally don't really, I get it. I just don't like it. I don't like that it's not really backed by anything. And now that there's all this like derivative pressure, I guess, or kind of clouding this space, FTX is maybe just the tip of the iceberg. I mean, there's all kinds of layers of chaos, craziness, cheating, stealing, lying, misrepresenting that I think is laced with through and through. There is going to be one cryptocurrency, I think, that will do well, like anything. Like in the .com boom, for instance, it was like there was some substance there. But then, when everything blows up, which I think eventually it will, there will be one champion is probably Bitcoin, in my opinion. But yeah. I don't know. Again, I don't know enough about it.
There's a good saying in Pine Tree, which was always the that I heard the first time, and why land mattered. It's like no matter what happens, tech, your business goes to business, and in biotech, if your cancer drug doesn't work, then it doesn't work. It's not it's not there anymore. But with land, you always have land. It's not going anywhere, right?
It's tangible.
It's always got value. It's tangible, yeah. So I guess in this crazy world, it's not a bad thing to be in land.
I think anything tangible. I mean, whether it be land, land, gold, anything kind of tied to real hard assets, I think is probably a good place to go. And I think we're seeing that, right? Like a lot of people are looking for safer ways to invest and looking at traditional boring companies that, are just, I guess, relatively speaking, are more tangible than other things out there that are highly speculative, especially this entire tech bubble.
Well, I want to hear about one of the more exciting things. I had a question. I was saving it for this podcast, which I want to hear Denis talk about these like killer results of Newfound. And like, what does that mean? It's just these huge numbers coming out. And I look at every other gold story. I'm like, womp, womp. It's like 30 meters of 60 grams, so whatever, 300 meters away. Could you explain to us what's happening? I want to know this.
Newfound's super exciting. I mean, it was an anti-dogmatic story. I guess I won't belabor it with the whole kind of genesis story of Newfound and why it's there and why we chose to go after that and what makes it so exciting from that perspective. But that's exciting to me, that it was sort of this anti-dogmatic story on the North American landscape with in a province that was kind of written off as couldn't possibly hold anything of economic size and significance. And it's just that's so just rife with fallacy, and I think a very unscientific, qualitative basis. So anyway, so it's nice to actually have some quantitative results from what we believe is an absolutely massive and underexplored district. And so one of the interesting things with Newfound is that we got so much love for Keats, right? Keats was like a phenomenal zone. And then, of course, people said, okay, well, then it's kind of a one-trick pony. Like, can you do it again? And then we very quickly jumped up to Lotto, and then we plugged into Lotto, and that was awesome. And then we split the difference almost arbitrarily into Golden Joint. And then now we've been filling in all of the gaps. And, you know, undoubtedly some new zones are going to come forward. But some of what makes this so amazing is that there's an incredible width and grade there that is so unlike what we see elsewhere in the world and what's available on the tray of brownies of, you know, vanilla gold projects out there. So the perceived, and I'll say perceived and prospective sort of free cash flow that one could receive from putting those types of widths and grades into production would be an exceptional thing. And so I think what we're seeing with Newfound, and again, I'm biased and this is all very biased, but I think what we're seeing with Newfound is a foundational asset being discovered. And when I say that, I mean a lot of the big companies were nucleated off of these foundational assets, whether it be like Goldcorp and Red Lake or Kirkland Lake Gold with Fosterville or so on and so forth, like these mega, you know, multi-tens of millions of ounces, or sorry, tens of billions of dollars of market cap companies really started to, they were all nucleated off of like these stellar assets that spit off an ungodly amount of free cash flow. And so I think that's the value that really sets Newfound Gold apart. What's really cool about it is that all that we're finding now is so shallow. You know, we still have to go to like that 300 to 600 depth window, and then 600 to 900. And there's going to be a plethora of zones, I think, that are going to creep up in that maybe don't come to surface. And so, and then God knows what happens to these ones when they keep extending them. And so, it's just so exciting to see that and see, you know, how much we're finding as we kind of fence our way out along the northern Appleton. And we've done a lot of work on the southern side as well. So anyway, I don't want to make this about Newfound Gold, but
I know we own a lot of Newfound Gold.
We do, yeah.
Mm-hmm.
I like talking about Newfound Gold. It's a big position for us.
Yeah.
Yeah. I like talking about the hating in Newfound Gold. The haters.
The haters.
That's fun. What was the big thing? Like, it seems like it's been corrected. The inconsistency, like not being able to do it over and over again. Like what? Not like hating and just like.
No, I think when you're a tall poppy, I think everyone tries to cut you down. And honestly, I think it's all good. Like in our perspective, like at least from my perspective, you know, the more people that are talking about you, the better it is. And in a company like Newfound Gold, where you have this just incredible asset and you're drilling with so many rigs, you know, sort of anywhere between sort of 10 and 14, depends on the day and the month and whatever we are in the exploration cycle. But from our perspective, you know, when you're putting out this much news, you want as many eyeballs on it as possible. And you can't do anything in this world, whether it be, you can have the best thing in the world or the worst thing ever, and you're always going to have haters. You're always going to have people that try to shit on it. But from my perspective, you know, who cares? Like, I guess to answer your question directly, though, what some people are saying, when we had that like that assay issue, for instance, with the batch of assays that came back, and a proportion of them, you know, didn't cut the mustard or gave us an unexpected result, is what it was. So I forget exactly the semantics of it, but we had about 30 samples, and then you would expect sort of 15 to come in above the average, and then another 15 to come in below the average, such that the plot of the 30 samples was basically, this is when you duplicate your samples, right? You take half the core Mother Nature doesn't make things evenly. So sometimes you're going to have a nugget or something awesome on one side of the core. It may not be on the other side. And then there's stuff inside of the core, which you don't see. So you don't know like really what side is the better side, let's say. And so when you take 30, let's say, samples, and you take half of the core and you take the other half and send it away, you would expect on a batch of 30 samples that you would get sort of half the samples, the other half would come back above what the first half came back in at. And then the second batch, and then one half of the samples would come back below what the first half went in at or came in at. So with NFG, it was skewed such that we had like, I think 4 samples or 5 samples gave us an unexpected result, right? Where you'd have like, let's say 21 samples came in above and then, or came in below, and then 9 samples came in above instead of like an even split of 15-15. And so most of the time, I think a lot of people that were astute in orogenic gold or astute on the topic would have said, well, 30 samples isn't enough samples. But, we were, with the information that we had to, disclose what the results of that were. And then that led us to like thousands of other duplicates. Like we literally had to go out and do hundreds and thousands of more duplicates through the entire data set. And then that all came back to perfect and normal. So that's basically where that introduced the first sort of critical point, which has to do with nugget. When you're in these high grade things, you're subject to nugget factors and volatility, I guess, or variability, high variability in the results. The other side of it too, which I think has always been a knock of these types of systems, would be the geometry. Does it stick together? Or does it glue together? And I think we've been able to prove that that's not our problem. So a lot of times when you can get these incredible things, you don't really get them connecting from hole to hole over large strike lengths. And in some cases for us, like they beautifully connect together over hundreds of meters, which is more than you would ever see like a lot of stopes in high grade underground mines in the Abitibi, let's say. So, I mean, I think if anything, we have more continuity in a lot of our veining than you would see traditionally in anywhere in like Kirkland Lake or Val d'Or or Rwanda or something like that. So that's another critique, I guess. But
That's good. That got settled too.
yeah, that's settled.
You think we make too much of the nugget effect in junior mining, or do you think it's the right amount? We really, I think like with smearing there, right? Like we always rip on people for smearing. Sometimes it's like not,
That's an interesting topic. We should get into that actually. The smearing stuff. So it matters a lot, in particular in like porphyries or in like Carlin. We saw that come out as a big thing in like Carlin deposits, big bulk tonnage, low grade things, where you had like a very small subset of samples that was skewing. So if you're like, let's say in Carlin, and you're looking for, you're drilling 350 meters of 0.5 gram gold or 0.6 gram gold, and there's like a 4 meter interval or an 8 meter interval in there that runs like 20 grams or 16 grams or 12, even 8, right? Like that's enough to taint the picture of that entire, that entire composite. So you literally have like hundreds of meters of rock that are not that 8 meter interval, let's say, that maybe 0.3 or 0.25, which
you're not mining.
You're not mining,
right,
and you're not making money off of. And so it's important. So like the nugget factor part, the smearing part matters a lot depending on the type of geology you're looking at too. Like for instance, if you're after an orogenic system, you want some nugget, right? Like all the best ones in the world have jewelry boxes. They have treasure boxes that you run into. You go through, okay, we have our expectations that, let's say this vein is running from the block modeling. Conservatively, we're going to, put X number of tons. Let's say it's 1,500 tons through the mill every day. And we're drilling and blasting 10-foot rounds on this vein. And we can, give or take estimate that on the whole, we're going to have like 15 grams per ton or 10 grams per ton or 8 grams per ton is going to be the grade that we're feeding through the mill. And then you run your mathematics and you say, okay, well, we're going to make money at this. This is going to be like a break even / profitable number. But you know that there's flavors of incredible in there. And then suddenly you can hit those jewelry boxes, those unbelievable payouts where you drill 3 or 4, and blast 3 or 4 rounds. And that literally made you.
But it kills you in a resource, right? I know that
Kills you
like
in a
the
resource.
high grade guys, like I know Steve DeJong with Integra, which what did he sell that company for back then?
700 million. Yeah.
Integra used to get killed by everyone because they were like, well, the resource is too small, and he'd walk around and be like, yeah, but we have like 300 gram gold. Like the Amex guys get killed for the same thing. Newfound gets killed for the same thing, right? Like resources are hard in these things because you're like, well, I got 200 gram gold here, and you're giving me a credit for what 30 in a resource.
Do you
Well,
think,
look at guidance on Fosterville. Sorry, Siege, not to interrupt, but guidance on Fosterville, because of trying to counteract that nugget. And this is something that really bugs Eric, for instance. Like, he loves to talk about this one. And he's right. But guidance at Fosterville was like 130,000 ounces. And they did over 300,000.
Right.
Like, at some point, you're actually misrepresenting to the public by understating what is there and being overly conservative, let's say.
So it depends on the system, is what you're saying. You're like, it depends on what you're looking at.
Yeah. It's like all of them are a little bit different. Sorry, Siege.
Do you think a resource puts a base on a stock value or a cap?
Ooh.
It can do both.
So what would incentivize a company to put out an updated resource then?
Once you start one, that's the only option you have, really.
I think if it's leading to something economically feasible, right? So, we can all do our own block modeling. When I learned how to do tonnage guessing, it was a really fun day. I think I was 25, and it's like, cubic meters times gravity. So you can just sort of guess, and you're like, 50% of that is full with mineralization, whatever. I think, though, that you should be able to do it yourself, right? So it always drives me bananas, especially if I own the stock. When a company comes out with a resource, it's like, this is not a mine. This isn't going to work. Like, this is not building anything. So you're like, what did you do? I got 150,000 ounces. Well, who cares? I don't know. Why'd you do that, right?
Yeah.
Well, because we wanted to show the market we were establishing something, and we're going to do more. And it's like, okay, well, can you show that you have 2 million ounces? Well, no, I don't really understand why you would spend the $100 plus $200,000 on an engineering firm to do that instead of drilling more holes. But I think that if you're doing, like, there's oxide gold stories in Nevada are a good one, right? Like, it's like this is an easy mine to build. Or grade. I remember grade resources in Mexico when they sold to Agnico for $300 million. They did this resource. I think it was like 400,000, 500,000 ounces, but it was like 1.5 grams, 2 gram gold in oxide at surface, low strip in Mexico. So they did that to just show, they're like, look how good this is, and here's the extension. And then Agnico came in, they're like, we're buying you right now.
Well, I think if you can do it too, like, there's a way to do it where you can say, like, for instance, take NFG for example. We haven't even, we're barely scratching the surface on this thing, right? Like, everything's open in all directions pretty much. And at this point, to stop and wrap a resource around it. And when I say it, are we doing a global resource? Or are we just doing a resource on Keats? Like let's talk about that. There's differences in what you can choose to do, and that's going to have a different impact on your stock. I'm a big believer in, like, the Lassonde curve for sure. But the reality is with NFG is it's a district scale project. We're trying to show district scale ounces and ounce potential. And there's a key distinction there between, like, district scale ounce potential versus actually quantifying a fixed number of ounces in a given deposit. Like, I'm trying to illustrate that there's a multitude of possible deposits as well.
Look at the big purchases. Ventana, Gold Eagle, Great Bear, no resource. Any of them, no resources.
Well, even like Continental had a resource,
but
then Buritica had a resource, but then Newmont came in and ripped it up into shreds and then did their own. And like, by the time it all happened, it was totally different picture than what they were representing.
So maybe.
Maybe
it's good.
I think it can. I think it can be good. Like, for instance, let's say you drill out the boundaries of something, and you know that, okay, like, it's not getting any deeper. It's diminishing turns going deeper. Like, we're already let's say you're in an orogenic veining system and it's high grade, and you're down 1,000 meters deep. You've got it pretty much boxed off in strike, so you know that you're not going to have much kind of creep into your exploration game. Now you're getting to the edges of your property, let's say. It's like, well, what else can you do? Now You've got the whole thing roughly framed out.
Like show you if it's a mine or not.
Now let's figure out, is it a mine? Like either, the exploration buzz is kind of gone. It's over. Like there's no more discovering that's happening here. This is like what it is, and let's figure out if it works. And so I think in that case, you have to do a resource and you have to push it forward that way. If you haven't been sold already, let's say, but if you're on the speculative treasure hunting discovery side of things, you're still finding more. You still haven't figured out the extents of something. Why would you shoot yourself in the foot by rushing into a resource? Like we met that. Remember we met that company. I won't say the name of it, but it was run by some really smart guys, and they were talking about doing a resource. And that resource was going to reflect, let's say, a few million tons of mineralization, right? Based on the back of the napkin. It was like, okay, the best here is you're going to have, 3-4 million tons of this. Probably could matter, but probably won't matter because it's only 3 or 4 million tons. But if it was like 20 or 30 million tons, it would really matter. The grade were good, but the tonnage was small. And it was like, then you go through the exploration story and you find out that they have like kilometers of untested fingerprints that look identical to what they've drilled out.
There's like 5 stories. This could be in my head right now.
And so it's like when you press the CEO, you're like, well, what is it? Is there 4 million tons here? Or like, if you had infinite money, how many million tons are we going to find? If you had $50 million, how many millions tons are we finding with the drills? And he's, well, I don't know, 40 or 50. It's like, well, that's your story.
Mm-hmm.
We're after 40 or 50. We're after trying to demonstrate that there's a 40 to 50 million ton potential here, not the 4 million tons that you want to put out tomorrow. By the way, if they went ahead with the 4 million, which I'm glad they're not, but if they went ahead with that 4 million ton story, it would be a snore. And forever after, they would have to put out like an update and an update and an update. And then like have fun trying to tell your 50 million ton potential story when you've got 4 million tons and everybody thinks that's all you've got.
Maybe it's because the resource space has been mired in a bear for 10 plus years, and they're used to raising a couple of $1 million at a time, and that's their mindset now. Like they have to do
That you need a resource to do it?
well, not necessarily, but maybe that's what they think is going to move the needle on the stock, because
for sure.
they need hit a milestone or something rather than drilling a fantastic hole and creating a narrative around what could be. They're coming to the markets with something to wave around with rather than letting the market determine what the valuation is. They want to tell. They want to say it's worth this much because we drilled out that much. But what Denis said, it just ends up killing the story, because now all of a sudden the market's valuing you on a small little postage stamp on.
Right. It's like I have 250,000 ounces of gold, and the average gold company trades at $100 an ounce.
Yeah.
Therefore, I should be worth 25 million. But you have 250,000 ounces of gold. It's not the same thing.
Mm-hmm.
And their market cap's 4. They're like, no, we should be worth 25. You're like, that's the scale. People don't.
That's not exactly.
It's not really how it works.
It's not how that works. Yeah, it was funny because you were talking about one of the investments that you made before about how much money they spent in the ground. For instance, you're like, well, I bought this stock because it had $70 million spent on it. And that was your justification of like some historic amount of money that was spent on something.
Me?
Yeah, you were saying. I think on the last podcast. It might have been Mawson actually when it was like $2. You're like, this asset's at $70 million.
Damn it, I hate that logic. That's not a good idea. I think have something go forward.
Right, it's a terrible. Yeah, well, that's what I'm saying. It's a terrible idea. And sometimes like there's a lot of people running around like that have that in their brain. They're like, oh yeah, it's like, well, sometimes that's not really,
Good like a sunk cost fallacy, or like we spoke to a couple of deals where like a lot of money was spent on capex to the point where the mines were previously in production, and to keep the mines on care and maintenance, they're blowing through 300,000, or one company was 150,000 a month, another was 300,000, just because they were so sold on the idea of keeping it a production story, and that old story of possibly bootstrapping the deal where they'll take the money that they make from small scale mining and explore with it. But I've never seen a company like that succeed. Where
Let's say it right now. The small scale mining to fund exploration is not a good idea.
The hub and spoke? You mean the hub and spoke
is not a good idea? Going to work. It will not work. I tried it.
Newfound. I'm not saying we're doing that. I'm just saying it could.
Is small mining for Newfound like $10 million or $1 billion?
Yeah, what does that look like?
I mean, at those grades and those thicknesses,
Yeah.
at surface, I'm sure
It's not so small.
It's not so small, but I mean, no, you're 100% right. Like this, like those stories never end well. They never have. But if you think though, there was a different. Remember, like 2011, it was the million ounce thing. Like, do you have 1 million ounces of gold?
Yeah.
It's like the race to 1 million ounces of gold. There was like hundreds of companies saying like, oh, like we're gonna put out our resource and it's gonna be 1 million ounces. And like there was just something magical that happened that equaled, you know, the windfall of a century if you could hit that 1 million ounce mark and the magical 1 million ounce number. And do you remember that? It was crazy. Like it was like so many people were caught up in
really
that.
Remember the million ounce number.
The 1 million ounce number,
But I feel like
number.
that sounds like a right thing.
And then there was the PEA, like the PEA
PEA.
market, where it's like, you don't have a PEA?
Can we talk PEAs just 1 sec? Just quickly. Okay, like I did.
Remember the PEAs?
Right, like a lot of finance education, right? CJ, you've done a lot of education in finance. Like we've been in mining industry. Like you
the
don't even need to do
5%
it.
discount rate.
What
PEA.
is a 5% discount rate is the most absurd thing ever. You're moving like millions of tons of rock every day. Like things go wrong. Rocks explode and land next to the next door.
Equipment constantly blows up.
And now we're in a risk-free environment where, you know, I can go into a savings account and get 5%, and I still see people come out with PEAs that are like, 5%. And you're like, what are you talking about? 5%?
Even 8% is absurd.
8% is also 8% was absurd in negative interest rate environments still because mining is so risky. We take no
100%.
no attribution for risk. And I think that if you do model it differently, and I think the majors do that when they go through it well, some of them. But you know, when you take that approach, it really takes mining and you look at junior mining in a whole different aspect. Right? So if you look at that and you're like, okay, man, would this work? You know, how quick is my payback? Payback period, so important in mining. Why is NextGen such an awesome project? Or even like the ISO stuff, right? For uranium, that stuff's so awesome because it's like 400,000 tons. Well, it's small 50% uranium. Some like radioactive, like
ridiculous,
something insane. And so you're going to make your money back so quickly. And I think that was the theme I thought during PDAC was like everyone focused on ounces. It's not during PDAC, but at BMO as well. And then PDAC, it's like everyone was focusing on ounces for so long, decades, building up this net asset value because that's what investors were valuing, right? You know, you buy these ounces and then I have tens of billions of dollars of NAV, not cash flow.
That's what Pierre Lassonde was saying. He was saying that and this is like at BMO, 2 or 3 weeks ago, just before PDAC in Miami. And he was saying that for like 30 or 40 years, the price of gold was relatively flat before the 1970s, like when things went a little bit nuts. And at that time, you know, everybody just, that whole per ounce in the ground thing started to basically, you know, how many, or per ounce, like per ounce produced or per ounce in the ground. There was a, you know, the whole per ounce thing became the measuring stick for gold. So it became, you know, leverage to gold. He who has more ounces in the ground, or she, and or he or she who has, you know, more produced ounces per year, you know, will have better torque to a rising gold price. And then he shows the chart of like the GDX and then the chart of gold and how they're exactly in lockstep. And like there's zero difference because mining companies have forgotten entirely about earnings and actually making money and running businesses. And it's all been about a race to how many ounces you can have and or produce. And so that's a big issue.
We need like a law in mining where it's kind of like Moore's law. You know how like every transistor's double every year or whatever it is. And so everything has to get smaller and faster. And we need something in mining where it's like your grade has to go up as inflation goes up for your costs. And it's like this certain curve of what a project matters, right? So it's like this is what actually matters. You just have a cutoff line.
Sure. At a factor of,
yeah, right? Like, I guess that would have killed a lot of projects though if you did that in 2003. I mean, like
so.
Rusin used to walk around, I think Toronto, with Malarctic, right? 2003 and 4, and no one cared. Gold was $300. He's like, look, this will matter. We're gonna have 20 million ounces. And everyone's like, yeah, but it's a gram.
It's
and
like
he's
a billion.
Like, it's going to matter.
What was the capex on KMR? Like $1 billion.
A lot. That was a lot at the time.
They had to move Malartic. It was like they had to move a town.
They moved the town, put everyone on wheels, right?
Yeah.
Move them
And it was
like
a
200
really?
meters. Yeah, so the whole town was put on wheels. I didn't even know it was a thing, and then I
Wow.
realized my logistics manager for Sterling actually did this, moving across
on
the province of
wheels?
Newfoundland. Yeah, you put your whole house on like a trailer, and then it
Oh.
gets moved across. And
They
so
had
they put the
reality shows
entire.
I thought they
Wow.
just built new
Really?
shit.
Yeah.
Yeah, Cisco did that whole thing. They moved the entire town.
And then there was one
Wow.
holdout. One guy held out, and they offered him a lot of dough.
That's
Did
right.
they? Did
and
they
he
dig
still
around
said
him?
no. And he went to the courts,
They're like, move.
and they offered it, and he ended up getting less than what they offered
Right,
him.
Right.
Wow.
Yeah. Usually the case.
I think they were pretty happy in general. I think the town was very happy with it.
Yeah.
In general, like
the
it was good.
playground that's there instead of the town is lovely.
Yeah. Well, they had no, I was talking to Sean, you know, it was it's a crazy story. I'm excited to get him on. He's going to come on at some point. But and hopefully soon. But it's like a really crazy story. Like it was really tough. And then there was a lot of like, I don't know, there was a lot of stuff that happened there. And but then in the end, like what a fantastic mine and execution.
Amazing.
Like-
Being there was incredible. The conveyor lines that are the only thing that was more amazing was seeing like Rio's, like the iron stuff in Australia when you're like have like these bullet automatic trains. That was pretty wild. But man, Malartic is a lot of dirt moving. So
A
like
lot of dirt
that's just
moving.
dirt.
It's
And you're like,
Tonka
wow, there's gram gold and all this dirt.
Yeah, it's just
like
Tonka
the
trucks in a
reality. It's
sandbox.
wild. Yeah, it's wild.
Meanwhile, I Am Gold's having a hell of a time with their dirt in a sandbox called what they bought off Greg Gibson.
That's
Trelawney.
Cote Lake.
Cote Lake.
Yeah.
Yeah.
It's a hard one.
Yep.
Bought that for what, 800 million? I think so, something like that.
And First Majestic is having a hard time with
Jared.
Jared Canyon.
Yeah.
Or are they really?
Shut Jared's had a hard-
shut down production
Jared's had a hard history.
Yeah, they shut it down.
yesterday.
Yeah.
The ASIC on that was like $1,800. Couldn't do it.
Probably higher.
Yeah.
Yeah. Crazy though. I
Yeah.
mean, that's the thing. It kind of, just to pull it back though, with the whole resource and grade and nugget factor and some of that chatter. It's like, it depends, and smearing and stuff like this. It's like, you know, geometry matters a ton in the business, where you are, the types of rocks you're in, et cetera, et cetera. It's like, if these big, massive blobs of gold or blobs of copper that you can just, are just like, engineers just make hamburger out of these things. They can just like lay it out and cut. It's like cutting grass. They just get it done, and they can make money all day long. And there's a ton of moving parts, but it all flows and it's all simple. There's nothing like, there's less unpredictable things that can happen with those big you know. And then if you have like high grade stuff, if the grade's forgiving enough, then you can have some complexity too, you know, veining and underground and et cetera. So, I mean, you know, it kind of goes both ways. Geometry matters a ton. The engineers can do a lot with, as long as you know your geometry. But if you have good geometry on a deposit, that can matter a lot.
For sure. It's so funny. I've been looking a lot into some big copper projects in the world, and this copper project Uticon, this one in Russia, it's 3 billion tons of a percent copper is their resource, and their mine reserve is 1.2 billion tons at 2% copper. It's like, let's take perspective of all these porphyry things we see just for a second and just think about the size of that thing, right?
Mhm.
And it's so interesting because most of it's made up of these little 1 centimeter quartz veins. And the chalcocite, which is 60% copper, is like almost invisible, and it bleeds over these quartz veins. And so people miss this forever. These other things around the world, you walk over, you're like, the veining is too small. And it's like kind of all over the place. But then when you look at the geometry of it as a whole, you get this billion, just
Right.
giant, third biggest copper mine in the world.
Well, a
whatever
bunch
it
of
is.
chicken shit veining, and then
Yeah.
suddenly it's actually pretty good.
Yeah.
It's like, remember Remarco with Hale
Mm-hmm.
in
South Carolina.
South Carolina? Now Oceana,
Mhm.
same thing.
Same thing.
I mean, it was a whole bunch of little kind of shoestring veins and complexity. But in the end, I mean, the whole package was pretty valuable.
Like the stockwork, like where is
Yeah.
it all going together? Yeah.
Like, take it all,
Yeah.
right? Where does it run when you do that? And then like technology improves too. Like, there's a lot of weird stuff, like optical sorting technologies come a very long way. We looked at a lot of that stuff with Goldspot, like new tech. But the optical sorting is phenomenal, you know? So if you have like black shale and milky white quartz, optical sorters and stuff. It's like
Yeah.
you can really upgrade and upgrade your material and run a lot less waste through the mill. If your gold is crediting to the quartz veins, let's say, and not to the black rock.
I'm using GoldSpot for some work right now. These guys are great.
Goldspot's great.
Yeah, I'm using them for this
Awesome.
work, this hyperspectral work. Is this tool. If you're a junior miner and you're listening and you have outcrop anywhere, Aster data, hyperspectral work, using some satellites, man, the
It's very good.
coolest image. You just see all of these basically minerals and outcrop using a satellite, and it just paints a picture of your entire property as if you soil sampled your entire property, like all of it.
It's
And if
pretty
it-
amazing.
it's
And a lot of
amazing.
people don't use it. It's
No, never.
Ludovic's so good.
That's who's gonna do it.
Yeah, that's who's going to do it for you
Yeah.
at Goldspot. And we got Ludovic from Ephagus, and Ephagus is like very well respected in that space. That's how we met him. Actually, he's a good friend of Vincent's.
Mhm.
But the multispectral, hyperspectral universe is incredible because Aster is like 8 bands of infrared. So the way it works is you get infrared cameras essentially, and then you get 8 bands of infrared light refracting off the rocks on surface, and then that gives you some different chemical signatures and your micas and things like that, your clay minerals, and so you can characterize things and fingerprint them and group them and categorize them accordingly and come up with rock codes and different alteration products and things like that. Actually, and then so that's Aster's 8 bands, but then you can get like the gold eye, which is 12 or 16 bands. So now some of them, the pay-to-play satellites,
Just
for
tightening up the
instance, are, like,
resolution, right?
way higher
Yeah,
resolution. Like the centroids on the actual like measurements themselves are a lot tighter, and then the number of bands of light that are getting like the overall ultraviolet spectrum is a lot larger range, which of course then gives you a lot more granularity and detail that you can interpret with. But we actually did it for Jarrett Canyon.
Did you?
Yeah,
Hmm.
we did it for Jarrett Canyon. It was cool because we did it on the pits. This one, Eric had it with Greg Gibson.
Mm-hmm.
And we took all of the open pits, and then we used the gold eye satellite, I think it was. So it was a little bit higher res. And then we were able to tease out the mineralization in the open pits and the alteration halos in the open pits, and then go and look at other structural areas on the project where we could, map out all of the different structures and then see if we could see similar clay alteration that was jumping out. Or like, I guess, clay mineral assemblages that were mimicking the alteration that you were seeing in the pits elsewhere along these structures. And then that was essentially, map that structure down to the right bed of like the I don't know, it was like Hansen 1 through Hansen 3. There's all these, that's the interesting thing with Nevada, right? You get all these like upper plate, lower plate, and all these different formations, like the Valmy formation, this formation, that formation, and then you find like the right formation, and then when the structure comes into that formation, bingo. So you'd have to first you have to figure out your layer cake, and then you figure out all your cracks, and then you got to try to, X marks the spot between the layer cake and the cracks. But yeah, we were using that alteration thing as a way to.
You had a target called like Shark Tooth to the north that they had to.
Yeah, they
that
staked
was
it.
cool.
The shark tooth.
So that's a good way of targeting.
Yeah.
That makes sense.
Yeah, like very logical, right?
I don't know
A
why this
logical
brought this
approach.
in, but now I thought of the stuff that you guys are talking about with the ChatGPT stuff. I don't know why that brought in. I don't know why that raised it
Matt's
for me.
guiding
Yeah.
us down all
I was
these like
like,
dirty
Shark Tooth,
holes of
I was like, man, I was like, all right, we're
AI
using these like
he's
cool,
guiding this
these cool
conversation into all
tools.
these crazy
these
places.
cool tools to like do a target. People with the cool tools and in message boards. I don't know why that came
The
together.
chat GDB
I don't know how.
blew my mind. So for everyone's information, I live under a rock, and earlier this afternoon, I'm like, Josh explained to me chat GDP.
Yeah, I mean, for everyone who's been on Twitter,
Or
obviously
GB.
in the last month, has seen 1,000 threads
GBT.
of the hand-drawn napkin, which will automatically
Right.
turn into a beautiful.
You could write
website.
press releases with it. Law papers. There's like a whole thing in schools now where it's like it's remember Wikipedia when we were in school? It's like
course.
can't use Wikipedia. This is like don't use ChatGPT. Your entire paper is written.
I was
for you.
laughing. I was laughing at chat GBT memes, and I had no idea what the fuck chat GBT was.
I think every time you say it, it's a different letter.
use different letters
yeah,
every
it's like
single time.
GPT grams per ton.
I've heard of it.
Chat grams per ton.
called
Chat
ChatGPT.
GPT.
You know, it's generative, it's collaborative, it's problem solves. It can do anything.
What does what's the acronym stand for?
I don't even know. We'll have to ask it.
Anyway, so he blew my mind. And he's like, yeah, we've been using it all the time. We use it all the time. I was like, uh-huh. And then he was showing, he's like, yeah, you can write press release, you can write this, you can write that, you can ask questions. I was like, can you just take all the messages from CEO.CA, like go to a ticker? I think we went to Newfound. And
We went to Newfound.
take the last week
We looked at the last week.
worth of like chat sentiment, and then see if it can summarize that as in a paragraph.
It
And
worked.
was a really well written paragraph.
It was
like
it was better than I could do.
for sure.
And you know, in seconds, it looked at. I think there was like 1,000 messages, and it perfectly summarized everything that people were saying. And I think there's always this inherent bias concern in AI that people think like, you know, what is it going to say? But it highlighted some of the concerns. It highlighted some of the pros. I mean, it was a great, beautiful paragraph.
We did it.
Looked at the price of gold. I mean, it talked about everything.
Apparently, Newfound only really matters if gold goes over 2,000. And 1980 is no.
According to yeah,
According
so
to the
works
chat
okay.
board.
It works
good.
okay.
Yeah, display on the.
Sorry, you're $20 away. I don't know if this is gonna work now.
Yeah,
It's
yeah,
like
it needs to get better on obviously timely information. You know, it's pulling. I think it only knows up until 2021, so it's just projecting what people say and applying a historical framework. But
yeah, but I think it's phenomenal. I mean, if we can do the 1 month, like if you go to the chart and you say 1 month, 3 months, what is it? 1 week, 1 month, 3 months, a year, 3 years,
yeah,
and then lifetime. And then each one of those gave you like a different summative blurb from all of the sentiment that was in the message exchanges for that time period. That'd be incredible.
it's pretty cool. I think it's it's gonna be something that we give to users for sure.
Yeah.
You know, some of the crazy message boards, you get on that board, there's like 1,000 messages. You can't read everything. You don't know what's going
No,
on.
you're just like, what are the,
Having the quick
Chat
ability to summarize what people are saying, I mean, that's huge. We're looking at a few other things, using GPT-4 now to strip out press release information so we can look at, obviously, private placements, warrant financings. We can look at flow through, anything. Start pulling all that information directly into CEO. So now I can have alerts for, you know, free trading days, for warrant expiries. I can know everything that's going on automatically, directly feeding into the site. I can summarize press releases. I mean, we've been playing around with this with Newfound press releases, as I was telling you. So it can even, I mean, it can read the images now. So it's telling me, here are the great holes that Newfound was putting out. Here's what people were saying on CEO about it. So I was analyzing, you know, I gave it a press release, I think a few thousand messages, and said, summarize all of this into, you know, one paragraph for me. And it told me, you know, what your news was, what people were saying about it in a succinct little paragraph that I could then tweet out or read. I mean, that's incredible in seconds.
it's pretty cool. I
When
mean,
exactly
I guess
will that be done? When?
I mean, we're doing it.
What exact
You know,
date
we're-
will that be
1
done?
month, 1 week.
Yeah, I mean, we're doing it
3
now.
months,
Right now.
1 year,
Tell
and
us
3
right now.
years. There
We're
needs
doing
to
it
be a
now,
blurb
I
on
mean,
every
yeah.
single
By
issue.
ChatGPT 17, we'll have it.
Sentiment, AI sentiment.
We won't be
results.
around by ChatGPT 17. We'll be working for ChatGPT 17.
What's crazy about this, though, if like we go back to RQ, remember like some of the stuff we were doing with RQ. CJ remember best probably, but you know, we put a ton of money and effort into trying to capture sentiment, trying to understand. Remember, we had that person look up at we looked up every single gold tweet and silver
Really?
tweet,
Hmm.
and then tried to do this like
Oh.
very deep sentiment analysis on that. And it was hard. It was like it was a very noisy set because it was like people winning gold medals in the Olympics and stuff.
You get a lot of gold to 8,000 tweets too.
Yeah, it was pretty hard to tease it all out and zone it in. But there was a lot, like it was a workable thing. But this chat GDP thing, man, wow, I wish we had that then.
Yeah, I think we were ahead of our time.
Yeah.
We
But-
had a lot.
But it'd be nice to kind of revisit some of those concepts.
I think so with new technology.
You
Yeah.
can just make things go much faster now.
Yeah.
Yeah.
You know, even this weekend, one of our data scientists, you know, in hours came up with code using GPT-4 to visualize a ton of data that we're working on, and that just saved months of what they thought it would take
On the code side.
in hours.
Yeah. That's pretty crazy.
I think the only issue with that, going to like the sentiment stuff, I remember sentiment stuff started getting hot when Twitter got hot, right?
Sure.
Mm-hmm.
And I think the only issue is that, you know, you get such a selective bias.
Yeah. It's
Right,
an
so the
echo
pe-
chamber. Right?
Yeah, so like the people, you know, like when Silicon Valley Bank went down and these things go down, then anyone in precious, like the majority of precious metals, like the world is ending, because a lot of people, precious metals are more valuable if the world ends. Still don't totally understand perfectly that, but that is generally a sentiment, right? Like you're trading you're trading value of gold for value of currency, and I understand that part. But the problem, so then the issue becomes that then your data is all
skewed,
filled with this
Exactly.
2008 collapse, which is not really the fair comparison. We don't need to get into macro here, but it's not really the same thing at all. And I think that that's the only problem with sentiment data, is that it's how do you get like people that are not talking about gold so that the macro piece is what you're talking about. I guess on an individual stock it might matter, but that's the only thing that can happen, right? Is that you just get messed up with data. You get the wrong data. It's too biased.
Yeah, well, there's a gamma of relevance as well. So, for instance, when you get, if you look at
gamma of relevance.
Yeah. So, if, for instance, like let's say you put out company puts out their financials, right? You would think, okay, you read through the financials and you're like, okay, this is a buy signal or a sell signal based on this company's results.
Definitely not talking about mining then.
Well, maybe we're talking about it. I don't know. So let's just assume. So what I mean by the gamma is you may not, the market is not going to respond immediately to its fullest potential in one day, that same day. So you may see that piece of news come out, and then you may see some movement in the share price in the direction that you may be predicting it to move in. But it actually may take upwards to 2 weeks, let's say. And that time's shrinking, but there's a gamma of relevance for information. So for instance, sometimes there's it's like a droplet. You put a stone in the water, and then the ripples kind of go out from that. And then the further they get out, the less they sort of matter. And so it's the same thing with sentiment information. The point, if you were to take sentiment today on gold, and then you were to look back, what would be the gamma of relevance on that sentiment? Would you go, as you said, if you go all the way back to 2008, you're going to get a very noisy data set where you're going to get all these bulls in 2008, all these bears in 2013, 2014 / 2012, and then nobody at all from 2015 to basically 2017 and a half. And then suddenly, a mix of both. And then, so you kind of almost have to look at, okay, well, there's going to be periods of times that matters more to look at that will be relevant.
Right.
If that makes any sense.
Yeah. Man, gold is so back to the beginning of this conversation. That the arguments for gold is so hard. I love gold long term. Great. Man, I remember the Euro debt crisis of 2012. I had Peter Schiff I remember Peter Schiff came in the office in 2011. Was talking about all the reasons that gold was going to keep ripping. That's when gold was $1,900 or whatever. It was going to keep ripping. And of course, he made a lot of money in 2009 when it ripped up from there.
Of course.
And all his reasons. And then all the things happened. Everything happened. Euro debt crisis. Fukushima, world is in chaos, right? And gold starts going down. Okay. So I don't understand. I love investing in bottom up and finding, because I think long term it goes up, and there's got to be a supply demand balance at some point. But I just have never understood the macro personally. It's so hard for me to keep track of.
If you told everyone in 2019 that inflation was where it is today,
$5,000 gold,
that SVB
banks are collapsing,
is whatever
historic
all
inflation,
this, everyone, and you're like, what is the gold price in this imaginary heaven of a universe for you? And they're like $3,000-$4,000,
millions of dollars,
$3,000.
Right. This is what all the popcorn eaters have been waiting for.
Literally right now, this exact
is
environment.
I'm one of them.
What else could happen?
I'm one of them.
Right.
I fundamentally believe in that. I believe that gold's going to have its day in the sun. I don't know when. I don't know what straw will break the camel's back. If it's
you go down the checklist: inflation, check;
banks collapsing,
check. Interest rates,
supply, costs of mining are going up. What else is going to happen?
What else would move it more?
Yeah, real interest goes negative.
Zombies.
That'll do it.
So we can trade our gold.
COVID. Sorry, we forgot about COVID.
Yeah.
Literally,
Pandemic.
COVID, global disease.
Yeah, global disease. Yeah. Total dystopian.
Well, that's
chaos.
my point. It's hard to think of what else feasibly could happen
what
next.
else is happening?
We've checked every box. I mean, Fed's, likely going to raise rates tomorrow. We'll see when this podcast comes out, and then maybe by the end of the year, I mean, people are expecting them to drop back down.
Okay, let's
It was
take a bet on lunch.
It was awesome. Then the government gave all the kids money to buy gold, and they ended up buying cryptos and Robux and
And Louis Vuitton purses.
League of Legend money, and all that money that should have gone into gold is gone.
Well, even cryptos, like there was literally money
Yeah.
deleted from the world.
Bitcoin went
Like,
up 60%
Like went to
in
money
7
heaven
days.
in
7
crypto.
days.
7 days, 60%.
Mm.
I own Bitcoin. I was like, this is awesome because it's been really terrible. But like, it goes up so fast.
I could
so
own
volatile.
Bitcoin. I would sleep okay with Bitcoin. I wouldn't sleep okay with some of these other ones.
You mean like Shibu Inu?
Like Shiba Inu would be
the
not on
next
my-
Dogecoin?
yeah, like Dogecoin, like Dogecoin, like all those are all the worst. Yeah, right. They're like the
Elon
worst,
Musk goes
man.
on SNL and it's like, this is a scam. Everyone buys it.
Yeah.
Yeah.
Well, first he said I loved it, and then it like doubled, and then he's like I hate it, and then it halved. It was almost a troll. Like he was just trolling it almost in a way.
Yeah.
Well, there was Scam Coin, and a guy actually raised like 60 million. And he was like, "Guys, this is a joke. I called it Scam Coin." He gave everyone his money back.
But
I
people
mean,
give money.
right? There was
Like NFTs, like crazy NFTs.
I mean,
People have like some
Was it Blippi? What was the guy's name?
sort of star,
69
but
million.
not star
sure.
athletes.
Yeah,
the digital painting.
yeah. That was spectacular.
Yeah.
There's like clips of basketball stars dunking,
Yeah.
which they do like 100 times a game.
I have a few useless ones.
in like 100 games.
He's about to
And like,
I went big
you
into
bought
those.
those? you leaned into those?
I haven't logged in. in
Oh,
like 6
no.
I gotta
months.
tell you, man, though, like
Uh.
crypto people that made money in it, they did it. So I was building a crypto software company. We were building blockchain solutions. We had like 50 engineers.
Right.
And this was 2018. We were timed poorly, but it was like 2018. Anyway, I go down to New York City for this big crypto conference. Okay. And I get there, we do big mining conferences. We do PDAC and everyone gets really excited because everyone has, there's parties and
Right.
it's like the convention center. Man, this party was so cool. Everyone that had made money. There are Bitcoin, giant, like gold Bitcoin coins on everyone's neck, velour tracksuits. These guys are wandering around, Lambos around every block of New York City.
Yeah.
Right? Like you're in the middle of Manhattan, just Lambos. No one even cares. Like tickets, officers are there. Just like, here's a ticket. They're like, we don't care. We made $20 million yesterday. we literally had, man, that was the most amount of money. I think they said that Ethereum made more millionaires than anything in history. And,
Fair.
but
I've got a couple on
the
Facebook.
showmanship, like the story around it. I think that was like goes back like people you just buy in. You're like, yes, I'm in. And it was wild. It's nothing. I've never seen anything like it.
Mm-hmm.
Well, it's funny because I think I was thinking a lot about the promotion behind all of that, and I can't help but think that they kind of swooped in and ate, Josh Crum and Roy Seabag's lunch when they did their BitGold. Remember BitGold?
Mm.
And they had BitGold.
They sold it. They made
Did they sell? No, it turned into gold money.
Yeah.
Right. Is it still alive today? Gold money?
Well, it's just a coin that represents gold, right?
No.
Is that what it is?
No, it was an exchange. And so what
Oh.
it was they basically went around the United States. So both Roy and Josh are both brilliant guys. But they went around the United States to like the major universities and like college pubs and stuff and talked about like modern monetary
Like policy and theory.
and
Yeah.
theory versus like the Austrian School of Economics and sort of like what is real money and how did money come about and what happens and blah, blah, blah. And sort of like, your standard procedure gold bug narrative. And they went around and told everybody about this and educated people. And it really, it rocketed. They did a fantastic job. And this is like the bottom of the market. This is the toilet of the market. I want to say 2015, 2016? Maybe 2017.
Okay.
I don't even think it was. I want to almost say 16.
Okay.
I'm going to go as far as to say 16 was like the heyday for them. And then they had like a credit card. They had,
remember
real
that.
gold in
I remember the credit
storage.
card.
And then you could like buy stuff in real gold
Yeah.
and exchange it on their thing.
yeah.
And there's another one out now too, Matador or something. Like
Monet.
Monet was the
Matad-
the next
Matadors, recently
thing.
launched.
But Monet is their
Matador is like a new one.
Deal, their
Yeah.
deal too. when you can buy
Monet's their deal too.
jewelry and you can sell it back to
Right.
them, and you can see in real time how much your jewelry is worth.
Yeah, it's
Cool.
24K
Well, you can do,
jewelry.
but they've taken that so much further. You can do that now with partial ownership of real estate, and you
Oh,
can do that with
crazy.
partial
Art.
ownership of art. Exactly, art was a huge one, big one. Actually, at that same conference, I went and saw a company that was doing it. They had like $90 million paintings. They're like, you can own $5 of this.
Of a Banksy.
I think I
Right?
think Josh and
I'll
Roy
take
could have
one.
had Coinbase.
I'm in.
Yeah.
Like
we would have done well, actually.
Yeah, we would have killed it.
based on their setup, they could have easily been Coinbase.
Right.
They
But
could have
coin-
easily just like, yeah, we're taking all this coin stuff too, and there we go, done.
Yeah, the issue is when I think that at least I saw a couple guys who were doing it with gold, and so I think the issue was turning the universes together. It was like Seinfeld, like crashing of universes for George or Elaine, whoever it was that was doing it. But like the crypto people are not gold bugs. Like that by nature, in tech, you're not necessarily as much of a resource bull, which is ironic, of course, because to build an electric car you need metal. But
Yeah.
maybe that was why.
Well, I mean, but you're a bear on. You're not necessarily a gold bull, but you're like a bear on modern economic theory and or modern monetary theory, and let's say fiat currency, and let's say
I don't
know,
think
some
so.
of
I don't
that
think they're.
stuff.
I don't think the hardcore Bitcoin people are definitely
they're
pretty-
anti-manipulation, aren't
Pretty
they?
intense, yeah. It's pretty intense, but for the most part, a lot of the community though, because that's gone away. You see, it's completely correlated to all tech assets, right? Tech crashed, crypto crashed, tech goes up, crypto goes up.
Yep.
It's all correlation of, and even look at metals. That sort of unfortunately kind of does the same thing, but. In a disaster, I think everything is positively correlated, right? That's usually what happens. And then it's like, when everything crashes, everyone just goes to, I guess, the dollar right now, right? So, I guess that actually, Pierre Lassonde was on some pod, and I saw, and it was an interesting movement right now where they're saying that that's going to be the big change in the next like 20, 30 years. I think everyone's saying sooner, but it's that the move to the dollar doesn't happen as much. And so now it's the move to the dollar and maybe some, the yuan or the.
Well, no, I mean, look at Russia, China, Saudi. All of them are saying they're not moving to the dollar. They're completely moving
taking
to
payments for
else.
something else. Exactly. So then it gets split.
They're moving to like gold and other currencies.
But if it gets split, then what do you go to? Then maybe you actually go to gold more because now there's one that overlaps everything. So you can't just go to the dollar. You can go. There's like multiple currencies, so that doesn't work the same way, right? There's like one currency now you go to. So if there's multiple currencies you go to, then you actually might go to gold more because you're like, well, that actually is representative in any currency. So that becomes the store of value that way, right? So maybe that was cool. I was just listening to that. I was like, that's pretty interesting, actually.
I think it's neat. I think it's neat that there's overlap in some of the driving factors to what makes a crypto investor, motivates a crypto investor to buy crypto.
We gotta bring that to
versus
mining.
gold.
It's so fun. Like then stories. Got a good story to talk about?
Like Denny's got all good stories, but I think when the generalist investors, and I've been saying this for a long time, inevitably come to our sector, it's going to happen. You're going to just see the inflated valuation or stocks moving back to the valuation that they should be. Right now, you're still finding a lot of good deals, and I think we've done a good job.
It's a buyer's market.
Do you think that's what's happening in lithium? Like when Tesla and GM and those like go in and they talk about buying lithium, do you think that's why lithium prices, like lithium stocks are relative to like other commodity stocks are expensive, but maybe they're not actually expensive. They're actually normal and everything else is just cheap. But it's just because there's more investors who care about lithium. Do you think that had anything to do with it?
Yeah.
No.
Okay.
I think it's
Fair.
I think we're at more than a top in lithium. And I know and I think I don't know if you believe. No, we had a long discussion on this.
Well, everybody's calling for what, 25? What is it, 25,000?
Yeah, everyone's calling, like every analyst report, $20,000 to $25,000 lithium.
Yeah.
I think it's what, at 40? I don't even know.
Yeah, so I mean that's clearly,
It was 70.
I wouldn't be buying up lithium just because I think the sector in itself or the subsector that it's in is going to keep on going up. But I
Right.
still think there's value in company. Like when you're doing that bottom up analysis, you're going to find good deals or good investments still, or maybe even good stocks still, right?
Yeah.
Because there's
Right,
a
bottom
huge,
up. That totally.
huge difference between investing in a stock and a company, right?
100%.
Yeah. So what would you say is a good stock and a good company?
I just asked you that. I'm turning it around like that.
Yeah. Well, it's hard because you're kind of putting the
They don't have to be the same thing.
The issuer that we invest in, not necessarily in a hard spot, but we put money in Lahontan. Would you say that's a good stock or a good company?
I think that it's a good resource.
Mm-hmm.
So that was an interesting one. That's a cool one to bring up.
Yeah.
Lahontan, good broker bought us it.
Yeah.
Bernie Canaccord, smart guy.
Yeah.
That's right. So that's 1.5 million ounces,
Yeah. 1.7 and
mostly oxide in Nevada,
Mm-hmm.
old mine in the middle of the Walker Trend, right?
Walker Lane, yeah.
Walker Lane. And what was the market cap was like 9?
We
8
were
million, something
yeah,
really,
at the time,
really low.
at the time they were marketing it at, the financing was at 11 cents. So you're buying the ounces at $7 an ounce.
Right.
And so we invested in it, and it goes completely against everything that we spoke about before because we're investing in a resource. They have a mine. They're paying for
Notwithstanding that we hate to affix a number 2 ounces in the ground,
and they're paying
like
for care and
$7 an
maintenance.
ounce.
There's an old mine that they're paying for care and maintenance. They put out a resource in January. They're looking to upgrade the resource, and they want a PEA by the end of the year.
But that's 1.5 million ounces, not 250,000. It's in Nevada, not in not
and more
in
than
middle
half of
nowhere.
it is oxide.
Yeah, and you're in like a really nice place.
Yeah.
But to your point, I agree. It did go against a few things, right? There was a lot of hair on that deal from very unhappy shareholders going up to it.
Yeah.
But I think that we made a call. We're like, well, we like this area of the world very much. I mean, you literally can't get it. It is the best place to be in the world in mining. And you have real ounces that aren't going anywhere. And you could produce from these ounces. And so you are judging. It's not every deal is perfect. I think that's the answer. It's not every deal is perfect. And so when you find a perfect deal, you jump head first. But not every deal is perfect. And that's why you diversify your portfolio a little bit, right? So, but stock is doing great.
It's at 20.5 cents.
Yeah, it's doing great. So
Yeah, but again, that's an interesting one. So was it a stock or was it a
it's
company, an asset? And I think it was, well, no, it turned out to be both, but you bought it because of the asset.
bought it because of the asset, and I,
You bought it because of the asset. Really.
yeah, and Kimberly had a good plan. Like she's, was as much hair as maybe was on the deal. She, we chatted for an hour and a half, and she was like, "This is what we're going to do, and we are going to do this." And it seemed like, yeah, okay, that definitely makes sense. We're going to prove this out and look at all the smoke around here that we're going to show that this extends, and we could have 2 million ounces of oxide. 2 million ounces of this combination material, where over 1 million is an oxide near surface in Nevada. That's pretty awesome.
There is a difference, though. Sometimes there's good stocks, and then they're not so good companies, but they're still good stocks. Like sometimes you have the right team. It's got a lot of
right
buzz.
story.
It's the right story.
Good story.
Whatever, and it's going to go somewhere. But even though really it's kind of almost a. I don't like those. I'd rather. I think I would. I think. Well, I don't think any of us really do. I think that's something that we tend to
Made some
avoid.
money on those in the past.
For sure. Sometimes you make money on those, but I mean, by and large, you're not.
You gotta get a little lucky in those, right?
Do you think a good asset can overcome a bad management team?
Yes.
Ooh,
We disagree on this wholeheartedly. Yes, I do.
good question.
Yeah.
I for sure do. That doesn't mean that they do always, but I for sure think that they can overcome it. And of course, it depends on how good the asset is and where it is in the world. And if you were to tell me how good is the asset in Bolivia or Paraguay or anywhere that is not truthfully easy to get to, safe, easy to permit, then I would say no. Because then I think that you're going to botch it, which has happened over and over and over again, right? Like if you're like, here's this huge gold asset in Bolivia, but no one knows what they're doing. How many times I've seen so many of them, it's a zero.
I think exploration or discovery assets can overwhelm, like can outshine a management team. Like the actual quality of the asset can outshine the management team, or eclipse it, I guess. In the production world, no.
Yeah,
I think
Yeah,
I think in the production world, generally speaking,
that's because
unless
you're a
it's just
startup.
so
You're a
crazy.
startup. It's
so
like any
easy.
venture startup, whether
Yeah.
in tech, right? Like look at all, what was Instagram started? You know what I mean? Like you have like these stories, but if you try and operate that for 10 years,
Right.
then it's probably not going to go very well once you're dealing with PEs and the NASDAQ and things like that, right? So, but I think in like discovering something, I mean, like it depends. How many examples do we have of really good management teams, really good teams, really know their stuff, right? Like Pure Gold is a great example, right? Like Marco Days really knows his stuff, and Pure Gold did not work at all.
Yeah.
Right. But then you have examples of teams that really don't have much of a track record, and then they, turn out hundreds of millions, billions of dollars of value, right? Like, so, I mean,
Newfound Gold.
Newfound Gold.
Snowline, new guy,
Yeah.
right? Like, it's cool.
Sure.
New people in the industry, right? This is amazing. That's how it goes. Nice to see like younger people who are pushing this forward. But like, so it's hard that way, right? Because what makes a good management is experience. It's kind of like you got to have a job to get a job.
Yep.
Like you need experience to get a job. You need a job to get experience, kind of thing, right? So, yeah, it's a hard one.
Yeah, if people only invested in somebody's, then we would have never gotten a chance with NFG.
Right.
And if people only invested in assets, then similarly there has been things that have I think spawned out of good people, like good companies that have grown.
You got to listen to the story, right? It's like if the person, regardless of experience, has a good story, like that makes a lot of sense. And there are smart people perhaps running the exploration, like that know what they're talking about. And again, that it makes sense. Like here's the theory. And then, the dice come up really nice because there's obviously a bunch of luck that goes into exploration as well.
I generally wouldn't invest a large amount of money in just a good team, though.
In just a good team.
Yeah, no. I'd be like, I remember once upon a time, this guy brought me in a company at Pine Tree, and it was a uranium company. You know who this is, but I'm not going to say it just because. Anyway, and he brought in this uranium company, and he was like, "Yeah, I want you to look at this. This is," and these guys came in and they're like, "I'm ex Cameco. I'm ex Denison. I used to be the head geological, everything for chief geologist for Areva in Canada, the Americas." It's like, okay, these guys are all, and they're like, I'm like, "What asset do you have?" They're like, "Well, we don't have an asset yet."
Right.
We're here to raise money, and you're investing in sharks, and there's blood in the water, and we're going to go out there and find you. I'm like, this is the worst.
This is
Like,
crazy.
this is like crazy. And they were worth it was like $2 or $3 million pre-money or $5 million pre-money. I'm like, no.
Man,
Like,
that's a big thing though. Like you see that a lot. I think all of us
The
in our,
gall for these gentlemen.
but people do that all the time. Like the ex Rio, the ex Cameco, the ex BHP, the ex Gold Corp, Newmont, whatever the senior
Right.
company is, and you have some VP, always a VP or director of something, right? And they're really smart guys, no question about that,
Sure.
right? And then they come and they're in a junior, right? And we've seen one of these recently, actually. They're in a junior, and then they're like, look, we're so smart because we know what we're doing, which is of course true. They do know what they're doing in exploration, but the way that they approach the junior is we're going to get 5 projects, and we're going to drill fences on all of them, and then we're going to evaluate this. And we're going to do 900,000 soil samples. And they spend $12 million, $15 million, $20 million, and then the stock doesn't really move, right? No one loves the story, and it just
There is no story.
there's no story. And so when you combine that big company thinking with small companies, it can really mess with you. And it's across industry, man. I remember I was on the board of this tech company, and these guys that were doing distributed data centers, right? And I go down, and the guy that was running it, he was the former chair of Palm. Was the Time like Entrepreneur of the Year or Tech Guy of the Year in '89. Like the resume was insane, and he just couldn't get this thing going because like it just was a disaster. It didn't work, right? And millions of dollars gone into it. We were a big shareholder of it, and I love the story. And I was in his house, and he's putting on like videos from the '80s and stuff like that,
Sure.
right? And I think that the lesson I learned from that was it's like, okay, well, just because they've done it before. And it's been done before, and you had big company experience, doesn't mean that whatever they're doing right now is going to work, right? Like unless they're like if they're on a roll and you've done a bunch of venture things that are relevant to the venture you're doing right now, like you've had like some wins in the previous and your ventures are going, then that's great. But man, the big resumes and stuff in venture, I am not sold by those anymore. I just too many times it just does not work because they just don't have that hunger maybe or like the drive or the. I need to prove myself sort of thing.
We talked about this because I'm like, I don't buy the big resumes usually, but I do like the fact that big resumes can attract capital in some cases.
And they're very smart
I agree
people.
with that.
And I've equated a lot of like, okay, in the world of mining, specifically junior exploration, you can't find anything without money. I mean, it sounds so silly to say that, but the ability to go out there and spear money is so
You need the
freaking
lifeline.
important.
Yeah.
You need to know how to do that. And if you can't get money, then you can't drill. And if you can't drill, then you can't find anything. If you can't find anything, you can't get more money to keep drilling to find more. Like it's just there's no.
So you need a balance. You need that balance. You,
You-
need
you-
big company experience,
you-
but then you need that young sort of like
For sure.
drive,
And
hustle.
sometimes somebody young and unknown can actually get money. Like sometimes they have that,
yeah.
like that ability. So there's a place for experience in it all, but I think that's part of what I see broken with this street, and why I wanted to do Goldspot and why I wanted to do this.
Yeah.
Like EarthLabs, the whole RQ investing stuff and Goldspot in general, was because it was almost an antidote to the sort of chaos, the herd mentality, the lemmings following the rock jockeys, the superstars,
Yeah.
and just the entire Bay Street flocking around these few people that are, kingmakers into the space. And then you've got these droves of analysts that don't really know anything and don't really have any exploration experience, but they like to talk about things and look at, like, the whole thing is just so weird. It's just so, coming from the field and seeing that.
Yeah.
I think, do you remember that? Like,
Yeah.
coming from the field and seeing it, and you're like,
Well, do you remember you came into Pine Tree twice,
right.
right? So the
Yeah.
first time you came to Pine Tree, so for anyone that doesn't know this, right? Denny was
I
coming
don't know
in,
this.
in 2011, right? Denny's in West
Yeah, I was
Africa.
older, yeah.
I think you were coming out of Ghana then.
Ghana,
right?
yeah.
So Denny,
No, I was at Gold Corp.
you're at Gold Corp in
and then I was at Gold Corp, and I had been back from Ghana.
right.
Right. Yeah.
So he's coming in the Pine Tree, and we were trying to find an analyst.
Mhm.
And so Denny, everyone's like, please come work here because you'd be great at this, right? And Denny, I think, got a bit of a, he was like, I'm not ready for this yet. Like, who are you guys?
No, I got the-
Get away from me.
actually, no, it wasn't
Don't
that. It
correct
was, I
me.
got the call from, that was a little bit of it, but I got the call from Jim Longshore at Extra Gold, and we had all that
Right.
dough to go explore the
Right.
Kibbe Gold Range, which I was super excited about, and work with Eve, and go back to Ghana.
Yeah.
And so then I
You
was
said that was like your unicorn.
yeah,
That's
100%.
the only
that was
thing.
it,
You're
yeah.
like done with it, and he's like, and then all of a sudden they're like, we have money, and he's like,
I'm in.
yeah,
I'm in.
Yeah.
I'm coming- yeah, I'm back. I'm
Yeah.
going back.
Yeah.
Keep my seat warm. I'm coming back. And then Jerry at Pine Tree was like, take this agreement, take it home and read it, because I was ready to sign it then and there. He's like, no, take it home and read it. What are you doing signing it here? Are you an idiot? Take it home. I was like, okay. And then as soon as I left, they're like, the Extra Gold guys called me, and they're like, we're at Turf Bar, like down the
Yeah.
street.
That was a great spot.
Okay.
All the
And
horse
then
racing?
Oh,
they're
yeah.
like, you got a bunch of, are you coming? You want to come back to Ghana? I was like,
Good stuff, like-
yes. And then I sent an email out saying, thank you, but no thank you on the job.
Yeah.
But the no, I think
I remember that email.
I think what was crazy was
Damn it.
when I did come to Pine Tree eventually, when I did join, I had no clue how capital markets and how the street worked at all. Like, zero clue how any of this worked. And I think it was just so off-putting to see, and not necessarily at Pine Tree, because I think everybody there was really smart and everybody cared and everybody was putting a lot of work into, vetting companies, and there was a lot of, deep diving that was going on the buy side there. But seeing the predominant just herd mentality, lemming mentality of things, and then just seeing, spotlights being shone onto like crappy exploration projects or companies just because so-and-so's in there or that person's in it or that's in it. And it's like, you look at it and you go, well, okay, but this is way better over here. And it's getting no money. And this
Man,
is
we
getting
made some
all
bad
the money.
investments.
Like something is getting over here that's awesome is getting nothing, and then this thing that sucks is getting all of it. And
Right.
that's really hard. That's
Yeah.
really hard to watch, right? And then realizing you're putting yourself back into your shoes as a geo, working in the bush, sweating your ass off, eating shitty food, just all of this, and the whole time you're thinking, I'm going to make some shareholders some money, and and you have this whole almost romantic idea of what, what's going on, behind the scenes, the kingmakers that they get to decide. You don't even know how this all works, but you're just like, the money guys are gonna.
They really know.
They really know, when we really show them,
Yeah.
like we're going to show them, and they really know, and they're really going to appreciate this. And then to figure out just how not like that it is.
But man, you really need both, right? Because like you can't, like what they say, you can't fight the Fed, right? There's no real difference in the market with juniors, right? It's like if you fight the market, you're like, this is the one. You better hope they hit something bananas,
Yeah.
right? Because even if they hit 10 of 10, the whole market will be like, wow, whatever. And like if you don't have the support, so I think that it really is that combo, right? So it's good to have. It sucks, but it's kind of like the fact. I mean,
Yeah.
it's the reality of like public markets, right? It's like you get killed by a lot. It really sucks when you hit good results and your stock goes down and you're like, oh man, now I can't raise money because my stock is so crap, right? That's the worst.
Well, and I know that conversations like this are helpful, like to listen to us kind of back and forth banter about all this stuff. And I know that, you know, with time, more important educational bits will fall out of these conversations as well. But I'm excited to dive into companies and actually evaluate their geology and evaluate, you know, their teams and speak to them and listen to their stories and do that, get that experience going, as we said in the last
we
episode.
did that at the beginning. We did that with Newfound.
What do you mean?
Company making asset, made tens of billions of dollars. Here's what we got, just bigger scale.
Yeah, but I mean, just in terms of like using this podcast as a platform to
For unknowns.
to
And we're
like
gonna-
new companies and go through that
Unknowns.
And
evaluative
maybe
process.
bring on some special guests as well.
Yeah, special guests, but more so like the deal room side of it, like to talk to people, because I'm really excited. The whole thing with this is to make, for everything to work. Like if you want to be picking great things, the market, the investor base has to be smarter too. Like working
sure.
on that side of it, like educating investors to make better decisions and stuff should help, right? Like if we all rise together, right? Then you know, if we tend to pick better things and people, you know, those better things are better rewarded because the market's that much more educated.
Yeah.
I think the whole thing will function better. So it's really cool opportunity to uplift.
It'll make our little sector more efficient, right?
think so, too.
Even if we think we made a good pick and everyone else thinks we made a bad pick and they sell it down,
Sure.
that's how you want things to work, right? Efficient markets.
Yeah. I mean, conversely, if we pick something, we talk about it, and then it gets too much love,
Yeah.
you know, that's also a possibility, and probably not. I mean, from a financial perspective, that's maybe a good outcome for us, but it maybe, you know, something can get overbought in that scenario. But that's not the point. The point is that if we can have these conversations and get everybody in here, it's not just about talking up our deals, although I like to do that. If we believe in something, we should be talking about it. But at the same time, it's going to be fun to talk about things we don't own too.
Yeah.
No. So, any other things we want to chat about, gentlemen? Josh,
I think we've covered a lot today.
covered a lot.
Yeah. Did a good job.
How much time? How much time have we been doing this here? A while. Okay, well that's it. That's good. We're wrapping it up. Oh yeah, Jesus, yeah. We're an hour and 17. So there you go. Okay, should we end with a story? Funny story.
You have the best stories. We were talking about Ghana. Tell us a Ghana story.
No, I'm going to tell a Peru story today.
Okay.
I'm going to tell a story about
Get my pisco
CJ's
sour out.
first trip to the bush. His first trip.
I've been out to the bush before.
Was he
but-
wearing
No,
loafers?
no,
or like
he
white
wasn't.
running shoes?
Oh, worse. That's exactly what the story's about.
Yes.
How did you know? No, so
What was the year? What was the year?
year was but CJ's also he's also the protagonist of the story, and he wins. So I'll tell you. So we were in Peru. I forget the year, maybe 2017.
Mm.
And it was Hochschild mining, and we were going to Arcata, which is at about 4,500 meters elevation.
It's up there.
It's up there. And then after that, we had to go to Eris, which is 5,300 meters, right? So it's both these places were quite
Yeah.
up there. Anyway, so we go there, and it was like me and CJ and the Gold Spot team at the time was pretty small. There's only like four of us, like me, you, Chris, Saran, Vincent, Eric Chu.
Mhm.
I forget who else. Anyway, so we go there, and Siege before the trip's like, Denny, what are we gonna wear on this trip? I was like,
I've been there,
just
man.
wear your
That's why I brought it up. I've been the first time I did this. I was like, I don't know what I'm wearing.
So he's like, I'm like, yeah, you just got to get some like good boots, good boots and some jeans and stuff. Don't like, you don't have to look the part, right? Like just wear stuff that you don't mind getting dirty. And anyways, he shows up with like these velour baby blue Timberland boots on, ready for war. But you know what? Everyone
Wanted those boots?
Everyone had succumbed to no. All of us, rugged, cool, geo experience. All of us hot shots, right? We all died up there with the altitude and all the goodies. And guess who? The warrior of warriors. He was carrying everybody on his back on
Magic
the way out.
boots.
That I believe for
They
sure.
weren't baby blued. They were
His-
blondies, and I look it up there.
And he was looking good.
Oh.
Yeah.
He was looking good. And guess what? He was holding his own.
Yeah.
And while the rest of us were sucking on oxygen tanks, Siege was holding it together, making us all.
Yeah,
look
we
like
went
suckers.
underground, and they were like, "You can feel the explosions from dynamite." And I'm like, "Are they allowed to do this?"
Yeah, they
And
were.
And
so
Chris
it
was
a
like,
little bit
they
extreme.
don't do this in Canada. I'm like, you can like
No, they
feel it
don't.
shaking, and I'm like, "Is this safe?"
Like, do you guys just blast all the time, like during day shift? Like,
Yeah.
you don't have like times, like
Yeah.
you don't have like the
They do that in coal mines in Kentucky
They
too.
can-
I've been in
they, like,
coal mine in
cycle.
Kentucky, just people just blowing things up.
like there's
all the
different
time.
stopes like cycling rounds in like
You're-
at various
you're like-
times throughout
And
the
they
day.
were like deep, and I was like, "Is this safe?"
Yeah.
Like, don't worry.
Probably not.
Boom, like
Yeah.
yeah, no, it's pretty cool. Anyways, but yeah, that was that's
Yeah.
that's kind of a
And then
lame
I brought
story.
like a pack of those cocoa candies, and I thought I was a criminal. I was like, I forgot to take them out of my backpack. I'm a drug mule. And they're like, it's just candy. Don't worry about it. I'm like, I'm going to jail.
You're like they're shaking as you're going up to the customs.
It's just
Yeah.
candy.
Candies.
You're okay.
Yeah, it's pretty cool. What else? Anything else funny happened on that trip? There was tons, but do you have a good story, Josh? You gotta give us one.
Got a couple. Maybe we'll save for next time.
Yeah.
All right. Well.
Yeah. For the record, there were Blundstones.
They were
The boots.
Timberlands.
So you were actually ahead. You're actually ahead of the game.
Velour Timberlands.
Oh, yeah.
Nice
Velour
choice.
Timberlands.
Nice
I like
choice,
it.
bro.
I like it.
Those are rugged.
I like
Those
it.
are rugged boots. Yeah.
Probably trade them down there for something cool.
Yeah. Sold them for toilet paper.
It was fun.
Yeah.
That was a fun trip. Okay.
Okay.
Well, thank you.
Thanks,
All right.
James.
We'll see you guys next week. Adios.
Bye-bye.